TPO Volume Profile user guide and installation video. The installation isn't that bad because I've actually done a guide for QuasiDB customers. And if you're interested, you could access that as well. Just let me know and I'll send you a private message. So the instructions are there, so it's fairly straightforward. You'll just need to copy files into its respective folders, and that's about it really. It's not complicated, it's just a case of ensuring that you copy the right files to the folders. And so if you go to File, Open Data folder, and that's the location where you have to put the files, and it'll be a zip because it's on Google Drive, so it's all zipped up. So you unzip it first, and then you plonk it in that location here. So that's the install bit. It should be quite straightforward. If it's not and you need me to help you, that's fine, just let me know. So how do we use the TPO volume profile? I just personally use it as support and resistance lines, and so we can have a good idea of high activity and institutional volumes. So when you see sort of thick lines, that's where the big money have come in at a particular point in time, and prices propelled against that volume. So we know that there's going to be resistance up here because there's a lot of activity going on, acting as a resistance. There's 3 volume nodes, 4 potentially here, so we know there's going to be a decent resistance above. The current one is of interest, and it's at 7486, and we zoom in and we can change it to candles. By default it's actually that, but we want to do candles really, and just to get an eye on the candle wicks, which I find quite useful for trading. When it's a long wick above, then it's heavy selling, and there's a long wick below, then it's like heavy buying. But so we know that there's a high volume node at 7486, so that's going to come into play potentially. Obviously it goes without saying that you do need to check your fundamentals. Sentimentally, this is actually a sell according to the QuasiDB system. Because of that, this should be a resistance. Okay, now we zoom out. The target below, because we're below this high volume node, which is a point of control, the next one below is very, very far away. Here, at 72.77, and that occurred on the 9th of January 2020. So it's quite old. We zoom out and you can see what happened here. So what is interesting, this huge surge, it's pretty much because the institutional traders, the big banks and institutions, they knew that this was a high volume node prior. We had a big sell-off on this node, and that's fine. And then it looked left, and it knew that this was a large traffic, so it was a level of interest. We had multiple tests of it, and it did propel quite heavy. Alright, so we did have a fall, but then we did rally a lot. So this level would be of interest for us from a high volume node perspective. 7280. Okay, so below 7486 we target 7280. Above 7486 we target 7558. So we just use them for support and resistance. But how do we maximize the likelihood of direction? Well, we can do a couple of things. What's quite cool is that FX, SSI have some fee indicators that we can use. We can use the auto trend lines. Remember to tick that box. And you'll see on the H4, see how we're at a triangle break, which is bearish. Okay, let's add the SLCs. This isn't free, this comes at a cost, but I highly recommend it. SLCs, stop loss clusters, allow. Okay, so if we were to examine the stop loss clusters, the one above is larger and it coincides with that high volume node from the April 1st. Okay, zoom out, we can see what happened on that point in time. So it's from that time, April 1st. Okay, so it was a large volume node and it was bullish. Okay, so it could potentially be a turncoat support resistance. So it looks likely we could potentially come up to take that stop loss cluster, and then we can have that level as a resistance because we've taken that liquidity, and then we can come down. Alright, but before we get there, we need to be above 7486, and before we get to this one, we will need to be above that. So we've got quite a strong hurdle here, and then this would be the resistance level, and then that would just really screw the retail guys. And then we take those stops, and down we come, potentially. However, it does all depend on the NFP today, because an outstanding NFP number, it will change things, and it could potentially assist some of the Fed speakers who are the voters. And when it comes to the FOMC interest rate decision, there might be some dissent. If we ever keep having blockbuster data out of the US, they could taper. Now, if they taper, then it could be risk off, and that'll be dollar positive. Okay, so if we have a good NFP, it will be dollar positive. And we know, looking at the weekly bubbles, look where the USD is. Okay, and the Aussie is the weakest. So that bubble should get smaller. That bubble is okay size. It could get larger, but it's fine where it is. That should reduce. So using these levels of confluence, we can kind of expect price to fall for the Aussie dollar. However, it is Friday and it's NFP. So we do see the casino effect occur, where the retail guys do get paid. So that is worth mentioning. SOC above is larger of the two, but we've got hurdles above, and I wouldn't imagine it would come up to there because we've taken that liquidity, unless of course they move their stops. So it's just a case of using these levels for resistance, and once above, then there could be a support, and then this would be a resistance. Once above, it would be a support, and then I think the final destination would be that stop loss cluster, because it's the largest stop loss cluster that that we actually we look at the quasi-DB service level. This is the largest magnet, so we could potentially get up there, and then we could fall. But like I say, it's all down to NFP. So there are your levels of interest. We hold below this is actually going to be quite bearish for the Aussie dollar, and the next target is going to be down here. And that's a long way away from price. That's $190. We can check the drawdown and the bears break even. They are 200 pips at their break even, 7263, 7281. So possible price is going to come down, and it's going to tease them to their break even. And what could potentially happen is that they won't actually be allowed to profit, and then of course it will go up. And that would just be very typical. These guys who have held on to that drawdown for so long, they're hoping, praying that they're going to make some profit. They won't be allowed to. It will come within a cat's whisker, 20 pips from them being able to make profit to get out at break even, and then it's going to rally. So that's a possible scenario. Let's have a look. Well, sentimentally we are a strong sell, and technically we are too. Look at the long volumes. It's 5,000 lots long compared to 1.6 thousand lots short. So technically, sentimentally, we should fall. Fundamentally, it all depends on NFP, and this is why I'm gonna just sit back today, because it is pretty much a gamble, because no one knows the NFP result. So My advice for you, unless you wanted to gamble, would be just to stand aside and monitor. We have had a lot of notifications this week, and one of them is gold, so I am watching that, and we'll just have to wait and see. By Monday, we'll have a clearer picture, especially around the dollar bubble. And what I want Monday afternoon, I want this bubble to come over here. And if it doesn't, then we'll have to rethink the strategy for next week. So hopefully it helped. It's just a case of using them for support and resistance lines and targets. And if you can use things in conjunction, then all the better. So we'll have to wait and see what happens here. I am not going to trade today. I'm just going to watch from a safe distance. I've already invested in gold, but I'm now hedged because we had the gold long signal, and it does make sense if you see Marco's chart as well. So have a good weekend. Next week's going to be pretty good. I think we could have done quite well on Aussie USD this week, but I had second thoughts about it, and it was quite annoying. I should have just stuck to the sentiment, because we knew it was a sell. So hopefully it helps, and apologies if the volume was low. I'm trying to investigate the issue now, and it could be driver related. I'll speak to you guys on Monday, but I'll do a weekly forecast video for the week ahead anyway, and I'll speak to you soon.